Good morning, everybody. Welcome to today's game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Lot to discuss today. We got the Fed decision yesterday. Markets are going nuts. Gold is making new all-time highs. Bitcoin has bounced back. We're going to cover all of it and the key data points today. So let's get started, folks. All right over here we go. As we get into the action here on this Thursday morning, the first and foremost thing, Federal Reserve takes a dovish tone. Now, again, the kicker here is this. They talked about slowing the balance sheet runoff. And again, the balance sheet runoff is a way that the Fed has been able to tighten by reducing their balance sheet. The kicker for me is that when you break down what the Fed said yesterday, they basically said that, hey, we're never going to reduce our balance sheet to where it was prior to the last crisis. And this drives me insane because, again, what it tells us is that they print a ton of money. They raise their balance sheet every crisis, 2008, 2009, obviously in COVID, and they reduce it when the economy gets big or gets better, but they reduce it by a fraction. For instance, during COVID, we went from something like $3 trillion on their balance sheet to about $9 trillion. They've reduced it to $7.5 trillion, and they're basically saying we're done reducing it. And so what does this mean? Well, when we get into our next recession, we're going to see that go from $7.5 trillion, let's say, to probably $15 trillion. Then after that crisis, they'll reduce it to $13.5 trillion, maybe 13, and the next one takes us to 20. It is literally unsustainable, folks, and this is the issue that we have with our U.S. government, many governments around the globe. It's all about just running that debt up, addicted to debt, and that keeps asset prices high, but again, it will cause one of the biggest crises, if not the biggest, since the Great Depression. The question is when. All right, so just talking about this here, they also reiterated that even with CPI and PPI 2 months in a row showing an uptick in inflation, they're not worried about it, and they're basically saying, and they reiterated 3 rate cuts this year. That basically says that they will start in June. And again, the Fed Watch tool is telling us there's a 68.5% chance approximately, or 68.3% chance that they will start in June. And the reason why you have to expect them to start in June is because, again, they're essentially not going to want to raise or cut rates, I should say, around the election. So a couple months before, maybe 1 month after, they don't want to do anything. That basically doesn't give them much time to lower rates 3 times, and that's why the market reacted like it did. Again, a dovish tone. Jerome Powell even saying, he said, don't even worry about the CPI and PPI numbers showing inflation creeping up. Essentially, the Fed saying, I'm okay with higher inflation for longer. And again, for those of us that are feeling the pain, whether it's at the pump or in the grocery store, this is the Fed we have, folks. This is what we have. We have to deal with it, right? We're going to have to basically take measures and vote into the right places, the right people, to make sure that that's not okay. It's not okay for prices to be going up every single month or every single year significantly. Okay, enough of that. Let's talk a little bit about this, guys. So notice how the Fed went dovish when we saw the Bank Term Funding Program, which was the emergency program I've talked about on this show, ended on March 11th. So it's almost as if we have reverse repo returning back to normalized levels. Remember, reverse repo was the Fed sending a lot of money back to the banks over the last year or so. That has basically returned to normal. The Bank Emergency Funding Program, where banks could borrow unlimited money basically from the Fed, that ended. And then all of a sudden, once that liquidity dries up, they're like, let's get more dovish. So it's almost like they're replacing it. And I think that's also important for us to take a note of. Jobless claims today, 210,000. Expectations were 212,000. I think last week was 209. So essentially nothing new here in terms of data on jobs. Jobs, honestly, very, very strong still, or at least the people being laid off is not jumping dramatically. Couple other things. Philly Fed Manufacturing Index came in today at 3.2. Expectations were for a minus 2.6, so that's a stronger economic number as well. Last month was 5.2, so it's still down from last month, but again, it is much higher than expected. Next up, we have Micron. So if you're looking at the Nasdaq today, you're seeing semis bouncing. Yesterday, actually, the semiconductors were much, much weaker than the rally would have led you to believe. In general, when we see a rally like that yesterday, the semis would have been leading the pack. They were not. However, they're making up for it today because Micron earnings blowing out estimates. Stock is up 17% today. We'll take a look at that chart. I'll give you the levels to keep an eye on. 5 below. So this is where it diverges, right? So we have tech and AI. Great. Then we look at 5 below, down 12% after earnings and revenue fell short of guidance. And again, that is talking about a consumer that may be stalling out here. And then Darden Restaurants, which is like Olive Garden and some of these other ones, they are down 5% after their outlook disappointed as well. And they mentioned a tough operating environment. All right. So again, that's also telling you that the consumer may be stalling out on going out to eat or spending as much money as they were post-COVID when they had all these savings to go. Apple drops as the DOJ prepares to sue the tech giant for violating antitrust laws. And lastly, Reddit goes public today, probably around 11 o'clock, give or take. You don't really know exactly the time, but again, it'll start trading today. The kicker here is the IPO shares priced at the high end of the range at $34. I talked about this earlier this week, guys. This company was opened, I think it was at 2005. It has never made money. And yet its IPO is priced at the high end of the range. Again, it's not something I'm going to buy personally, but again, there's obviously demand for these type of assets out there. It's kind of like a meme coin, and I'm not saying it's a meme coin, but the point is that the question you have to ask is, if they haven't been able to make money in the last 20 years, what makes people think that they can actually make money in the next 5 years? I don't know. But that's what people are investing in. Okay, before we go into anything else, we're going to do a quick spin. Yesterday, remember, we spun the wheel, and the wheel told us that someone won the live trading room, $400 a month. So they won a month of the live trading room. You had to comment, obviously, and we're going to run it right now to see who that was that commented. We are going to find out. Here we go, guys. Let's see what we got here. Going through all the comments. By the way, there were literally thousands and thousands of comments. And here we go. At Shubhamrana5774. All right, so again, that is the winner. Congratulations. We're going to, by the way, in just a couple minutes, we're going to spin the wheel again. We'll see if it lands on Kitco Silver, Trading View Year. We got lots of amazing stuff here. But again, this is the winner right here. Reach out to Lawton at verifiedinvesting.com, and I just want to write that up here. So it's Lawton, Lawton, at verifiedinvesting.com, and he will hook it up and get you access to that service for a month. All right, congratulations there. And again, in just a couple minutes, we'll spin that wheel again to see what people are going to win. Now, let's get right into the charts here, guys. So first and foremost, let's talk about the S&P 500. Right now, the S&P's up a little bit, but look at yesterday's candle. What happened? We went back in the wedge pattern. Now, if we know, and again, I love, by the way, the comments you guys were telling me about how you've learned the confirmation signal. Warms my heart because it's so beneficial to your understanding of what is a true breakdown versus a fake breakdown, especially in this case. So if we look at this chart, we had a close below, secondary close below, but no confirmation. So you did not confirm the breakdown. If you don't confirm the breakdown, the odds that it's a real breakdown are just slightly better than 50-50. It's not a very good shot. And so ultimately what happens, they ram the market right back through this line right here and get it back in that wedge pattern. So again, once again, not jumping the gun and saying, oh, the S&P has confirmed a breakdown, and knowing that it might have been a fake out, was able to keep you potentially away from shorting the market on this break and keep you from having a loss. Now, again, it's not perfect, but again, this has led me to be much more successful in trading. We now have to watch, where do we go in here again? Do we break above or do we break back below? If you break above, you have to confirm above. If you break below, you must confirm below to really solidify that breakdown. Speaking of which, if we look at the NASDAQ 100, the NASDAQ 100 has confirmed, right? We confirmed right over here. So if we look at this candle, closed below, secondary closed lower, there it's confirmed, retraced to the scene of the crime, fell, and even yesterday, look, it's not even close to getting back there. While the S&P made new all-time highs yesterday, the NASDAQ 100 did not. So it shows you that the confirmed breakdown has more teeth to it versus obviously the S&P, which was able to surge right back up very, very easily. Okay, so Watching this chart, let's see today, do we go up and retest? If we go up and retest this line, it should be major resistance. And this is the key, guys. Once you confirm below a level, this then becomes major resistance versus minor resistance. Minor resistance is like, oh, it might stall there, but it could also just push through, aka what we saw in the spider's chart. Look at how it went right back up and got right through because it was only minor resistance in this situation. Minor resistance, it was able to blow right back through that level. So again, just really important stuff here. Now, a couple things. I'm going to call pseudo BS on this rally that we're seeing yesterday into today. I don't think it's going to last, and I'm going to tell you why. The bond market's not telling us it's going to last, and the dollar. So the dollar did have a big drop yesterday, but the dollar is bouncing right back up today. And if you look at where the dollar was over the last 5 trading days, we're actually still very close to the highs. So that's not telling me that the smart money, which is more like the big money, is believing that the Fed has control on inflation and that inflation won't put a chokehold on the Fed's ability to act later this year. So again, that's what this is telling me. The other thing that's telling me this as well is the 10-year yield. So if we look at the 10-year yield here, the 10-year yield, we knew it was into resistance, right? So a pullback was likely. But look at the minor levels of the pullback. We were at 4.3 and we're trading at 4.25. It's not like all of a sudden we saw the 10-year yield come all the way back down and at least test support and fall back towards 4%. We're not doing that. And so again, what this is telling us is that even though the markets liked the commentary, they loved Jerome Powell's, dovish optimism that, oh, inflation, don't worry about it. Don't worry, we can turn on the printing presses and then, nothing bad will happen. No inflation, no worries. The market, or smart money, big money, is calling the bluff here. They're saying, no, we don't believe what he said yesterday. While the retail crowd loved it, they're not buying into it, at least not now. And that's catching my attention because essentially what we could end up doing here is going like this and then breaking out to the upside. Rates could actually start to go up here. Now, obviously, that could change if we start to break lower, but we have to monitor the chart in here. All right, so again, let's just get that out there. But in any case, let's monitor that. All right, going on to a couple other charts here. Nvidia's trading up today, but again, I wanted to draw your attention to this channel. So this is what we would call a bearish channel. What I'm watching on Nvidia today, as it's up pre-market on the back of Micron earnings, is do we get up to this line? And if we get up to this line, do we hold within this zone? This is what I would refer to as a bearish kind of channel, right? You're coming off this high end, that's a bear flag, right? So you're looking at this level. Let me get you a price on that. I'm going to be watching closely to see, do we close above or below $930 today? Below, you're still within this range. I would still consider that very bearish. If you close above, not as bearish. It's still bearish because you still have the reversal engulfing candle, but it would be less bearish if it closes above that level. All right, couple other charts here. Let's take a look at Micron. Micron, again, look at that monster surge on earnings. Huge initial green candle. Since then, it's kind of just chopped in the overnight into the pre-market this morning. But let's go to the daily chart. So right now, it's trading at 112. Where would some interesting lines be where we could actually figure out what this could be showing us? And I have a couple lines to show you guys. So if we zoom out, I put them on already because I didn't want to take the time to have to find them again. But basically what I'm looking at is there's 2 levels here. All right, number 1, we have the day tradable level today. So again, this will be a level I watch potentially to day trade on the short side should it get up there. And remember, it's trading at $112. The first level is essentially taking this zone down here, connecting it through here, and right through here, and it gives us a pierce of 120. So if we surge up and pierce 120, I'll be eyeing it. I'm not saying I will do it because obviously depending on how it looks at the relative time, but that would be a level that I would potentially look to short. Now on a swing trade basis, where would I be interested? Well, what we're gonna do is we're gonna take this 2018 high, connect it through the highest point since, and it gives us a zone at 130. So 130 to me, if over, let's say, the next month or so, it pushes up to 130, that might be a level to think about on a swing trade basis, all right? So again, swing trade short in those bases. Remember, you short resistance, buy support, right? Okay, next up, let's take a quick look here at DRI. So this is Darden Restaurants. Look at that big down candle, or excuse me, this is FIVE, excuse me. This is Five Below. So Five Below, we'll look at Darden in just 1 second here. But here we have the big drop. We're trading at 184 after closing at 208-ish yesterday. If we go to our daily chart, where are we looking at technical support? So first level right here, we'll put in the line on the chart here. I'll draw it in. You guys can see it on the screen there. So first level is going to be this pivot low at 176. That's an obvious major pivot, right? Major pivots, by the way, educational moment here. When you have big highs that dip and you go back up, that the lowest point in a big kind of movement like that is going to be a major pivot. A minor pivot would be much more like something like, you know, like these little ones right in here where it just is kind of chopping around, and that's something just to keep in mind. So that would be major. That would be 176. And it also, interestingly enough, if you draw that line and extend it out, look at what it goes to right here and right here. So that, to me, is a level I'll be watching today. If it gets through there, you have a couple secondary levels down here, but for the most part, the 176 does look interesting on the charts. DRI, which is Darden, I mentioned that just a minute ago. There's your drop on Darden. Looks a little thin pre-market, not a lot of action, which makes it a little riskier when the market opens. But if we look at this trading at 165 and we go to our daily chart, let me just look here. Looks like 160, right? 160 starts to be a little bit of a pivot point right down here. That, again, could be a level. Just be careful. Any stock that is that thin in pre-market, it can really whip. So the thinner the stock, the bigger the probabilities that it goes below, even if it bounces eventually. As a trader, as a day trader, I have to be very aware of volume because, again, as a day trader, you can't really afford for it to go too far below your entry price before it bounces because it can ultimately stop you out. So again, just be aware that the thinner a stock, the less lucrative or the higher risk, I should say, it is for day trading. Lastly, Apple. Not a lot to talk about here, guys, on Apple. Again, the DOJ potentially suing them likely today. And again, you can see it's down a little bit from yesterday, trading at 177, but it's not down enough where I'm going to be excited on a trading opportunity. We're only down like $1.50 or so. The only thing that would get me interested if we went back to this low at 168-ish, 169-ish, then you have a major technical little pivot low there to trade off of. All right. Back to center screen real quick, guys. Let's spin this wheel. You guys know I love this. So again, Kitco, we have TradingView, we have Lux Algo, NordVPN, all of these sponsors. And as I said, so we had some new companies reaching out just in the last day or so. As I mentioned, that they can get themselves on this board if they want to participate in the wheel of appreciation. So I'm going to spin it right now. Let's see what people win today. Awesome. Paul Sampson's 3-month access to his range trading mastery course. Very exciting. I hear him in the background, excited for one of you guys. This is an amazing course, folks. Again, amazing trader. And again, this course is amazing. Probably valued at $300-400 right here. And again, what we're going to do today, guys, is do a comment. If you want to win this or be entered to, number one, you have to follow Verified Investing on YouTube or on Twitter, and you have to comment in one of those places. Basically, let's see, what should we have them comment today? How about one technique that has helped them? Well, no, let's change that up. Let's say, tell me your best trade that you've ever made. What's your best trade you've ever made? Let's do that. All right, that'll be fun to see. I'm curious to actually watch and see what the best trade is that you have ever done. All right, let's move over to here, guys. I want to get right into our charts on Bitcoin. Bitcoin obviously having a very significant surge to the upside in yesterday's action. Remember, it's risk on. So the kicker here is always remember that when you see the stock market go up substantially, when people get excited, when people think about the printing presses at the Fed starting to go nuts again, what does that tell us? It tells us that people feel like there's more money coming and then risk assets go up. Bitcoin is right in that groove, right? So if the stock market's going up, if Nvidia is going up, probably Bitcoin's going to bounce. It had a big reversal candle here. Now, granted, this wasn't at a major low, so it doesn't have as much power as if this red candle was down here at like a major multi-month low, this would probably be a bottom. Now, it doesn't have quite the same factor to it, but it's still very impressive. Very solid move today, and we're out, I should say yesterday, and we're only basically pausing here. So you're just pausing today. If you can get a pause, believe it or not, you could go like this, and what does that start to create? Flag pattern, right? You look at that little flag pattern. So granted, I'm jumping the gun. I don't know if it's going to create that pattern. Maybe we reverse right back down. But this is, if we get a candle like today, I would start looking for that bullish pattern to maybe see this thing start to turn up, maybe retest 69, and then obviously that 73,000 level. Now, the negative would be is that you have to remember the bigger time frame. So we're talking literally about one candle yesterday and a few candles in the next few days potentially being bullish. But you still have to be aware that the weekly has yet to close above 69.2, which was 2021's highs. That's still a major factor for me. And you also have to watch the stock market, right? The risk on, risk off factors in this market. If all of a sudden we see higher inflation coming out, PCE, next CPI, all that stuff, and the Fed starts to be basically discounted that they can actually act, then you likely see Bitcoin roll over with the stock market. So there's just a bunch of different things we have to look for here as a technical trader to find out what the next move is. But I would basically put it in the camp right now, slightly positive bias based on yesterday's candle, but let's see what it does over the next couple days. Quickly looking at Ethereum here, guys. If we look at Ethereum, good bounce as well. Ethereum had a monster flush. I mean, think about this. Ethereum went from a $4,000 pierce all the way to basically $3,000 before that big bounce yesterday. I think I talked about this in some key things. If you look at right here, right, you had this low, you have this area here, and kind of right where we pierced in that zone. I actually thought it would go a little bit lower myself because there was this other major level here. Maybe it still gets there, but as of now, that's still a positive bounce on Ethereum. All right, going to just a couple other charts. I want to look at gold. Gold is having a pretty impressive move. Look at this move yesterday on the Fed. All right, now you guys know I've been a big fan of gold. Again, I took my profits already on my swing trades. I still hold a hoard of gold on the longer term that I continue to hold. And again, so far gold is having a monstrous year here, really competing with the S&P at this point and beating it. Not so much Bitcoin at this point, but we'll see obviously later in the year. Now gold's down ticking a little bit here today, so we'll have to see, or just this is the 10-minute candle. We'll have to see where it goes. But I think the biggest thing to look at here is number one, we made on the daily chart new highs, although we are pulling back. And I want to put that trend line, that same trend line needs to go in here. So what I want to do here is put this one back, because this is one where I want to see where we close today. Do we close back below this line by end of day? It's coming back in, but this again still will be resistance until we confirm above it. Okay, so again, little things like this, very, very important to watch. Does it close above? Does it confirm? If it confirms, I was looking at a bigger time frame on this, and I want to just show you this real quick. If we go to our weekly chart on gold, and we go all the way back, in fact, let me go to the monthly. I want to go to the monthly here. So what I'm looking at here is if we look at the monthly, and we put the high in from the 1979 high all the way up to the 2000, what was that? The 2011 high. Then your target zone now comes into view at a short-term major resistance, right? So again, if we look at this, this is the 1979 high, 2011 high, and if we look at this, you're looking at around 2350. That would be major resistance. So that could be, if we do confirm above this short-term level, that would be your next target zone of around 2350 before you should expect a solid pullback. Quickly going to silver here. Again, we'll just touch on silver as we come to conclude this. But again, take a look at this bigger pattern. This is going back to 2020. To me, this still looks like an inverse head and shoulders here. Hasn't really quite broken out yet, but it's borderline. Maybe it's starting to right here, but obviously that would be very bullish. And even so, if you look at the bigger, so you have the shorter term inverse head and shoulders, but if we look at this, what type of pattern is this? Right? That's a bull flag as well. So even though silver is a little trickier to judge because of its industrial metal factor, you still have to say that overall the bigger time frames are very bullish on silver. All right, quickly going into oil here, guys. If we go to oil, we can see that oil is having its second small down day. Remember, we still have a breakout level here. Let me try to draw this in as best I can. So there we go. So you still could potentially pull back to this zone, but as long as you stay above it, you've confirmed above this level. You have to think at some point this turns up and goes to this $85 level per barrel on crude oil. And lastly, natural gas, guys, just touching base on natural gas here. Natural gas had a little pullback yesterday. If we look at this, one of the things I would just draw in here, it looks like we're making a little bit of a wedge pattern to me now. So if we draw a line here and we kind of draw a secondary line down like this, this is a nice little wedge pattern that's coming very much to a head in this area, right? I mean, you can only stay inside of here for very much longer. So let's watch to see which way this breaks. Does it break out or does it break down? If it breaks out, I think you get a very substantial move on natural gas. In general, if oil is going to go to 85, you would assume it would be to the upside, but let's watch and see. All right, guys, on that note, back to center screen here. As always, guys, thank you. I'm so glad we're able to spin this wheel every single day to give you guys lots of wonderful things to win. Again, I'm excited for people when someone wins that trading, the World Winning Trader Series, $5,000 right there. Or Kitco Silver, I mean, a 10-ounce silver, that's amazing as well to have that in your hand. Lots of fun prizes. So thank you as always, guys. Make sure to comment on Verified Investing today and tell us what your best trade ever was. And again, I look forward to reading the responses. Thank you so much for joining me on the game plan. Take care.